this RSI thing. So let us analyze this over a 9-day period. Let us assume that over a 9-day period, 5 days it closed up and 4 days it closed down. Okay. So first you have to calculate the ratio, which is 5 by 4, which comes to 1.25. Correct. Now, if you add, so this number becomes 2.25. If you divide 100 by 2.25, what is the number that you get? 44.44. Once you get 44.44, all you have to do is 100 minus 44.44. What is the number you get? 55.56. So this is the number you have got. So you have a number which is above 50. Right? Now let us just switch this example. This is case 1. In the case study 2, we are assuming that it was up only 4 days and it was down 5 days. Okay, it just went down. Right? Now let us do this maths all over again, and I will rub this off. We will only look at the new number now, and we will note that number. So we have from case study 1, we have one RSI number. Then we move on to the next case study. So this is 4 by 5, which is how much? 0.8. Is this the number?
Yes.
Okay. Now when you add 1.8, so it becomes 1.8. Now you have to divide 100 by 1.8. So obviously it will be number lower than 100. What is the
55.56.
55.56. See how the number
opposite ho gaya uska.
Just opposite of it, right? So 55.56. In the second case, what you are doing is 100 minus 55.56, and that gives you 44.44. Now, do you see how the number has changed? Now, all of us know that if a stock declines, the RSI heads towards 30, which is this case, it heads towards 30. And if the stock is moving up, it will head towards 70 and sometimes 80 also. So this will move towards, or this number rather is moving towards 70. Do you understand how the up and down movement impacts the RSI? That's on the calculation side of it, right? The second, this thing is, so you have a bands 70 and 30. This is the overbought zone. This is oversold. Ideally, a stock, if it falls before 30, it should be in your radar. Whether you buy that or not, that's a different thing. If a stock has moved above 70, you should be ready with a sell target on it, right? But while this works most of the times, I mean, not most of the times, in some of the situations you will see, and in fact, I would rephrase, in most of the situation, you will see if the stock has moved 70, the stock has more volatile movement, has more upside movement, gets even more bullish, and especially in a very bullish phase like COVID that we've seen a lot of money in the market, the RSI also sometimes heads to 90. So there is a very famous adage which says that RSI lies. It is lying. So sometimes, so what you have to actually be careful is, if it is going above 70, you should ideally keep some stock left with you, maybe 10% or 20%, so that if the stock moves up, higher up, you can capitalize on this one. So you will see that the stock has moved above 70 also. The other comparison that you would like to do is compare RSI weekly versus RSI daily. It is possible that RSI has touched 70 here, 70 on the daily time frame, but still has some uh, some gap left. Some still has some scope. So maybe it is say around say it is around let's take it on the higher end little bit. Maybe it is at 75 now hypothetically, and you are still seeing this around 60. In such cases, we have seen that the stock has still has scope and stock has moved even further high, whereas you have exited the stock because you read that 70 is an oversold, overbought zone, and 30 is an oversold zone. Likewise, sometimes you'll see that the stock falls uh, below 30 and goes as low as 15 or 20 also. But the idea is no one knows what would be the lowest RSI on the scale that you'll see. But I think the idea is to accumulate here in phase wise if it goes around 30 and below. Likewise, sell in phase wise and not sell 100% if the stock touches 70. It is possible that you will see most of the time the stock corrects around this level. It is quite possible. But in one or two cases, you'll see that, and especially in a very bullish phase where there's a lot of money circulating around, there is a lot of money entering the equity markets. In those kind of situations, most of the times you will see that the stock has touched an RSI of 80 or 90. This is generally seen generally seen during a very bullish phase, or also the last leg of the bullish phase. So you have to be aware of that. Now we will analyze some of the case studies now. So Sarvanaji, I think we can